In estate sales, we talk about inheritance a lot because it's probably the biggest expense you're going to have when selling an estate house. So what are some of the ways to avoid or lower that tax? And it's all legal. I don't tell anything illegal. So quickly, the inheritance tax is with the state. I'm talking about the state of Pennsylvania right now. The state tax is what the federal government charges, and that doesn't start until you're over $12 million. You can think of inheritance tax as transfer tax. Transferring an asset after death to another person generates inheritance tax. Much in the same way you pay transfer tax when you sell a property, since you buy a car, all that kind of stuff. The bad or unfortunate part is that not only will the heirs pay inheritance tax, which comes off of the estate distribution, but when you sell real estate, you pay that transfer again. So now to the avoidance or the reducing part of it. The first thing to keep in mind is that it's a transfer from one owner to another owner of assets that are within the control of the deceased owner. Okay, they have to be in control of it. An irrevocable trust is not taxed if it's in place when the person passes away. Talk to an attorney about setting up a trust and the pros and cons and differences between revocable and irrevocable and what they mean to you, your estate, and your individual circumstances. They're great for some people, not right for others. Any assets that are jointly owned are not the sole property of the decedent. For example, if a father and son own a bank account together and the father passes away, inheritance tax is not paid on the whole of the account, only on the portion owned by the decedent. If 5 people are on that account, that decedent would only own 20% of that, assuming it's set up in the traditional way. It's only taxed on what the decedent himself or herself owned. Next way is life insurance. Many people are advised, instead of putting their money into assets like stocks, bonds, and stuff like that, divert some of that into life insurance policies. Life insurance policy pays out $500,000 or even $1 million, may not have any tax liability whatsoever. Whereas a home estate sale will be taxed, investment properties will be taxed, capital gains come into play. So that's another one of those. Talk to a lawyer, or accountant, or qualified financial planner to discuss the individual details of that could impact you. The joint ownership of a house. Well, there is a Medicaid, Medicare look back of 5 years, meaning that they will look back on who owned the property over the last 5 years, and if the person applying for assistance to go into a nursing home was the sole owner, then the whole value of that at that time will be subject to Medicare's or Medicaid's look back. In other words, let's say that mom owns a house and right now it's worth $300,000. 2 or 3 of the kids have put their names added to the deed, therefore changing the deed and ownership to mom and the adult kids. Well, 3 years go by and now the house is worth $500,000. Double check this with an attorney or an accountant, but Medicaid will go back to what it was worth when the kids' names were added to it, which would be $300,000. The same holds true for capital gains. But again, it's a conversation best based on your individual picture, your individual circumstances. The last thing to look at is any costs or expenses that have accrued. If you're an executor handling an estate or one of the heirs, and you've been helping out and pulling money out of your pocket and paying the bills and like electric and gas and lawn care, you're driving back and forth. Any money that you may have loaned the parents in that circle or any other circumstance, or any bills that you may have paid, should all be deducted from the proceeds that would be taxable. Whenever I do an estate sale, as the agent, I make sure I get those numbers together and take them off of the proceeds of the sale so that there's a good record of it. And if a $500,000 sale only nets $400,000, you now have a record of it to avoid being overtaxed. That's just what I do for all my clients, assuming their attorney wants it done that way. Now, 99 times out of 100, they do. If you'd like a free executor's checklist to help you out, look for the link below. And if you'd like any more information on estate planning, trust, and anything like that, and if you don't have an attorney to go over it with you, please let me know, because I could definitely recommend some area top-notch lawyers. This is Bill Eaves, Associate Broker with RE/MAX. I appreciate you watching, and let me know if there's anything I could do for you.